EPS guidance, it's coming in at a midpoint about 9 cents higher, but still below the consensus expectations at this point. My colleague Robert Hum is attributing this to the big beat in the first quarter. Where do you stand on this? Is it real, the rosy guidance for the rest of the year?
Good morning, Tessa. It is real, but what Walmart is doing very effectively, I might add, is straddling that line between showing how much momentum and power it has in its business model, but at the same time maintaining some level of conservatism to support what has been a really dramatic increase in estimate revisions that have been driving not only the stock price higher, but the multiple to expand. And I think everything we saw today from Walmart suggests that that is going to continue, and this should be a core holding for investors.
What we've seen is really inconsistent results on the consumer from different retail companies. Strong retail sales out this morning, just smashing expectations. Tell me what investors should think about the space given what Walmart is reporting and whether Walmart really is a standout as opposed to a bellwether.
Walmart's a standout, without a doubt. And you are right in that retail sales and consumer spending has become more consistent and episodic. And that is most likely going to continue through at least the rest of the year. There's just so many distractions in the consumer environment that are making households a bit uneasier. And that is going to have an impact on the willingness to spend. Now, with that being said, what Walmart is showing is that it's on its own path. To put that in perspective, between the second quarter of last year and the second quarter of this year, its sales in the U.S. for its core business grew about $4.5 billion, a huge number. With about 130 million households in the U.S., that equates to each household spending $35 more at Walmart this year in the summer than it did last year. And that's because it's very convenient to do business with Walmart, its prices are compelling, and its experience has been really top-notch. So I think that continues, and this is less about what is happening with the overall consumer environment, because it has been challenging, and more about Walmart.
All right. So, Michael, to the extent they're taking market share then, which is kind of what I think you're saying, given the market itself doesn't seem to be growing that much, who are they taking it from? Are there any names investors should keep in mind on the other side of this, not necessarily the good side?
So, David, I think it's coming from all sorts of different places. One thing that Walmart benefits from is the consistency with which it engages consumers. On average, 100 million households shop at Walmart each week. When you have that regular interaction, it means that it's more likely that that shopper is going to add an additional item to the basket. There's other ways that it can do business with those consumers, like it's growing online business. So where is it coming from? A lot of the discretionary retailers that are going to report are going to have results that are nowhere near as good as Walmart, whether it's in the home furnishing space, consumer electronics. Now, it doesn't necessarily reflect a share shift, but it does show that what Walmart is doing is really on its path of its own.
Interesting when they're seeing the strength in health and wellness that they give specific credit to the GLP-1 drugs or the new weight loss drugs fueling that. I wanted to ask you about Ulta because we're seeing shares on fire this morning, up about 10% after Warren Buffett's Berkshire Hathaway revealed in a 13F filing a small stake there. What's your view on Ulta?
We like Ulta. The stock has been way too penalized for a slowdown in not only the beauty category, but also some increased competition. There has been a dramatic increase in the number of distribution points for prestige cosmetics and hair care over the last few years. What that is going to ultimately do is lead to a shakeout for the industry. It is putting some short-term pressure on Ulta, but we think Ulta emerges from this situation in a much better position. And so we think this is a prudent investment. The stock has been far too penalized, and the risk reward here, even after this move today, is still quite good.